two accounts, both designed to build retirement wealth, both offering tax advantages that most savings accounts could never compete with. And yet the difference between choosing the right one and the wrong one for your specific situation could be worth tens of thousands of dollars over the course of your investing life. Most beginners either pick one randomly, let the default enrollment at work make the decision for them, or spend so long trying to figure out which is better that they end up not funding either one. All three of those outcomes are expensive. And all three of them are avoidable once you understand exactly what separates these two accounts and exactly when each one makes sense. My name is Tomas, and this channel is about finance, automation, and making the right financial decisions from the very start. If you are new here, welcome. Hit that like button right now and subscribe so you never miss a video. Today, we are settling the Roth IRA versus 401k debate for beginners. Clearly, quickly, and with a direct answer at the end. Let's get into it. Let us go through what each account actually is, how they differ, and then the clear framework for choosing between them. What a 401k is and how it works. A 401k is an employer-sponsored retirement account. You contribute through payroll deductions, meaning the money comes out of your paycheck before it ever hits your bank account. Contributions are made with pre-tax dollars, which means every dollar you put in reduces your taxable income for the current year. If you earn $60,000 and contribute $6,000 to a 401k, you only pay income tax on $54,000 this year. The investment grows tax-deferred inside the account. You pay income taxes on withdrawals in retirement. The contribution limit for a 401k is significantly higher than an IRA, currently over $20,000 per year for most employees, with catch-up contributions available for those over 50. And many employers offer a matching contribution, adding free money to the account as a percentage of what you contribute. The annual contribution limit adjusts over time, so check the current figure for the year you are in. What a Roth IRA is and how it works. A Roth IRA is an individual retirement account you open independently, at a brokerage like Fidelity, Vanguard, or Schwab, completely separate from your employer. Contributions are made with after-tax dollars. You pay income tax on the money before it goes in, and then everything inside the account, the contributions and all the growth, comes out completely tax-free in retirement. No taxes on withdrawal, none. The contribution limit for a Roth IRA is lower than a 401k and phases out at higher income levels. There is also a Roth 401k option offered by some employers, combining the employer-sponsored structure with the tax-free withdrawal benefit. Worth checking if your workplace offers it. The core difference that determines which one to prioritize. The fundamental difference comes down to when you pay the taxes. A 401k gives you the tax break now, reducing your current taxable income. A Roth IRA gives you the tax break later, producing tax-free income in retirement. Which one is better depends almost entirely on one question. Do you expect to be in a higher or lower tax bracket in retirement than you are today? If you expect to be in a higher bracket later, which is true of most beginners early in their careers who are currently earning less than they will at their peak, the Roth IRA wins. You pay taxes now at your lower current rate and access all future growth tax-free when your rate would have been higher. Locking in today's lower tax rate on decades of compound growth is an extraordinary advantage. If you expect to be in a lower bracket in retirement, which can be true for high earners at the peak of their career, the 401k wins. The tax break now at your high current rate is worth more than the tax break later at a lower retirement rate. The practical answer for most beginners. For the majority of people just starting out, younger earners, people in the early stages of their career, anyone currently in a low or moderate income tax bracket, the Roth IRA is the right first account. Tax-free growth for decades on investments made at the lowest tax rate of your entire career is one of the best financial trades available. But the 401k comes first if your employer offers a match. Every dollar of employer match is a 100% return before the market does anything. Contribute to the 401k up to the full match first. Then open a Roth IRA and fund it to the annual maximum. Then return to the 401k for anything above the match if you still have capital to invest. That sequence, match first, Roth IRA second, additional 401k third, is the framework that maximizes every dollar for the vast majority of beginning investors. So there is the complete answer to the Roth IRA versus 401k debate for beginners. A 401k offers pre-tax contributions, employer matching, and high contribution limits, with taxes paid on withdrawal in retirement. A Roth IRA offers after-tax contributions, tax-free growth, and tax-free withdrawals, with lower contribution limits and income phase-outs at higher earnings. For most beginners in a low or moderate tax bracket, the Roth IRA wins on tax strategy. But the 401k match always comes first because free money is always the best return available. Capture the match, then fund the Roth, then go back to the 401k. That is the sequence. Follow it and you will never look back. If this video finally clarified the debate for you, please hit that like button. It genuinely helps this channel grow. And if you are not subscribed yet, click that button right now so you never miss what is coming next. See you in the next one.